every time that we see a big event, for crypto, it gets reflected in the market because the markets are still following narrative and not only fundamentals.
Hello and welcome to today's episode of Markets Daily by CoinDesk. It's Thursday, July 17th, and I'm your host, Helene Braun. The market is looking relatively quiet this morning. Both Bitcoin and Ethereum are roughly flat. The CoinDesk 20 index, which measures the performance of the 20 biggest assets, is down by about 0.84%. Yesterday, we received an update on the spot Ethereum ETFs. All issuers but one, I believe ProShares, submitted their final filings as expected and are now ready to launch their funds as soon as they receive the green light from the SEC. One detail that these final documents revealed was the management or sponsor fee that the issuers would charge investors. And to no surprise, although our newsroom was indeed a little surprised by the magnitude of it, but Grayscale set its fee 10 times higher than its competitors. They'll be charging investors 2.5% on their trades, while BlackRock, Fidelity, and Co. are somewhere between 0.25% and 0.19%. One expert on X said that they quote, might have screwed themselves. So, if you follow the spot Bitcoin ETF flows, you know that Grayscale's Bitcoin Trust has lost billions of dollars in assets under management, while all other funds have seen inflows. But I'm sure there's a strategy here somewhere, and maybe our guests will know more. So let's bring in Paola Origel, co-founder and CEO of Hyla Fund Management.
Hi, Helen. How are you doing? It's such a pleasure
Good.
being here with you.
No, thanks so much for joining us, Paola. Has Grayscale not learned from the launch of the spot Bitcoin ETFs? Now, that fee was at 1.5%, which was already considered way too much by experts in the space. Now, they went even higher with the Ethereum ETF. Why would they do that when they've, been bleeding billions already with their Bitcoin fund?
It's very interesting, and that's a great question. And I asked that question myself, especially because BlackRock just disclosed their 0.25 fee for the spot Ethereum ETF filing as well. So I think the proposed fees for these Ethereum ETFs are very variant, with Franklin Templeton suggesting a fee as low as 0.19%. And as we talk about Grayscale is looking to convert an existing fund into an Ether ETF with a fee of 2.5. It sounds pretty high, especially with the lessons learned, with the Bitcoin ETF. Also, Grayscale is planning to spin out 10% of assets into an Ethereum mini trust to safeguard at least 10% of the assets over the short term. I think they're doing this aiming to avoid the high fee issues that damn the the Bitcoin ETF launch in the past.
Now, what do you think will be the deciding factor here for investors looking to invest in one of these funds? Will it depend on the fees, or is it going to be name recognition? We'll see BlackRock and Fidelity dominate again.
I think it's going to be a combination of both. Definitely, we'll see over and over again that the name brand carries a lot of weight, but definitely in some cases, the fees also as well. It's interesting, like Bloomberg intelligence analysts say far noted that 7 out of the 10 ETFs set to launch are offering fee waivers, with some waiving fees entirely for periods ranging from 6 to 10 months. And many issuers involved in the Ether ETF race have previously launched Bitcoin funds. So which as we know, have drawn like around 6.6 billion in assets in the first 3 weeks and attracted around net 33.1 billion in inflows by the end of last month in June. So despite initial skepticism, inflow predictions for Ether ETFs remain very optimistic. And Ethereum has a smaller market size and trading volume compared to Bitcoin, which means we could see more price volatility. We have to remember that Bitcoin's market value is just over 1 trillion, while Ethereum's is around 359 billion. But I want to point out that the extensive and growing ecosystem built on Ethereum is expected to attract more investment into the existing protocols. supporting and empowering the Ethereum ecosystem. Even Galaxy Research estimates monthly inflows of 1 billion for Ethereum ETFs. And Tom Donlevy from MV Global expects up to 10 billion in inflows over the first few months. So those are big numbers. Even Bank X 22,000 price target for the Ethereum ETF is based on its forecast that Ethereum's take rate will generate around 66 billion in annual revenue by 2030. So those are pretty big numbers. So I think in essence, the approval of these ETFs is not just a win for Ethereum, but for the entire crypto space. I think it really is validating the asset class and could pave the way for more financial products that integrate digital assets and drives further adoption and investment from traditional finance.
Now, you spoke about price volatility here for a little bit. What's your overall view of the market right now? We've been seeing a lot of volatility, especially in Bitcoin in the past few weeks. What do you attribute this to?
I think the crypto market is known for its volatility, and the recent sentiment shifts are a testament to these characteristics, right? I mean, just a few weeks ago, we saw the market driven by greed, as we're seeing it again, and investors were eagerly buying into this rally. However, that quickly turned to fear as prices began to drop into the 50,000s, only to revert back to greed shortly after. And we're seeing now, I think the prices, you say, they're being pretty flat. I mean, this roller coaster, highlights obviously the emotional volatility of the crypto space. With that say, I think that Bitcoin's recovery above 65,000 this week is particularly, noteworthy. And I think you have touched on this point before on previous podcasts. It's not just about price. I think it's a reflection of a broader market sentiment and external events. The rally partly was fueled by the broader market's reaction to the shocking news of an assassination attempt on former President Donald Trump. And these events spark a wave of market activity, affecting not only Bitcoin, but other major cryptocurrencies, right? Like Ethereum, Solana, BNB, and even some meme coins related to Trump.
Now,
Um,
why was that, Paola? What's the connection here between that event and crypto markets?
I believe that having the approval of the stamp of approval of one of the major presidential candidates is unprecedented. We've seen, the Democratic Party being very tough on regulation and taxation in the digital asset space. And I think having that stamp of approval, and even with the VP nominee of Trump with Vance, I think that people feel more confident that there
Hmm.
is a space and there's a bright future for crypto.
Now, it was announced, I believe, earlier this week that Donald Trump is going to be speaking at the Bitcoin conference in Nashville next week. Is there an impact of these conferences on the market usually?
It's I'm asking that question myself, but I think yes. I think historically, every time that we see a big event, for crypto, it gets reflected in the market because the markets are still following narrative and not only fundamentals. But especially, I mean, the lineup of participants for next week's Bitcoin conference is amazing. I think it's going to be very interesting. I don't know if you're attending. I'm not, unfortunately, but
I'm not either.
we have two presidential candidates, right? We have Donald Trump. We have Robert Kennedy. We also have very big personalities in the crypto space like Michael Saylor, Anthony Scaramucci is also going to be there, even Russell Brand. I think that's attracting a lot of attention. And I'm very curious to see how the market will react. I anticipate, and this is obviously my personal opinion, I think we're going to keep seeing a rally. And I think the price of Bitcoin, it will go further up.
Now, Paola, lastly, I want to ask you, you come from a banking background, having worked for HSBC. We see more and more of the, let's say, more reluctant banks embrace the crypto industry and launch new products in the space. Goldman Sachs last week, and there was news yesterday that State Street is looking to create stablecoins and tokenized deposits to settle transfers on blockchain rails. Why now?
Well, I think it makes sense to me, especially because you mentioned my background. I think for since we discovered Bitcoin, and even when we first launched our hedge fund of funds in 2018, we have seen a lot of friction and resistance, from traditional finance and also regulators, to accept the space, embrace cryptocurrencies, and even blockchain technology. But more and more, I believe that TradFi institutions like big banks and like State Street, they're seeing the major potential of the underlying technology. Not maybe not so much yet, the cryptocurrencies, but they're seeing the potential of implementing blockchain in their platforms. And that's not only and it's not a coincidence that is at this moment. As I said before, I think the political environment and the potential stability of having a regulatory framework in the US for digital assets is driving this interest much more, much and more, much more every day.
All right, Paola, thank you so much for sharing your insights with us this morning.
Thank you so much, Helen, for having me. It has been a pleasure, and I hope I can see you again.